Greetings, members, one and all of the Salivation Nation. Gold and silver get smashed. And who is to blame? Let's find out. Indeed, we are seeing a massive beating of gold, silver, and platinum. All of the metals down sharply today. Only palladium is in the black, no movement at all that we can see, and rhodium is the outlier with a $1,000 increase. Crazy, but that is somewhat expected for rhodium, especially considering its track history over the past couple of years here. Let's talk about the metals that really matter to us, gold and silver, both down dramatically today. And there's only one reason, almost only one who is to blame for what happened today. But let's take a look at what it's been talked about in the media here. Reuters has an article and a piece here. Gold hits a one-week low as Fed interest rate signals. Yes, indeed. The U.S. 10-year yield rises to its strongest since April of 2021. And as we know, higher bond yields and a higher dollar typically means lower gold and silver prices. Silver slips to 3-week lows, and gold prices slid to a 1-week low on Thursday as minutes of the U.S. Federal Reserve's December meeting signaled quicker increases to interest rates, boosting the dollar and treasury yields. And pretty much kind of as I predicted in previous days here, that the first rate hike might actually mean lower gold and silver prices. Spot gold fell 1.1% to $1,790.20 an ounce by about 1 o'clock to its lowest since December 29th. Fed futures were down 1.7% at $1,794. The very hawkish Fed minutes sent the dollar and the yield significantly higher, which has not helped gold, said independent analyst Ross Norman. The U.S. dollar resumed its climb towards a recent 14-month high, while benchmark U.S. 10-year Treasury yields rose to the strongest since April of 2021. The Fed minutes released on Wednesday showed that officials had discussed shrinking the U.S. central bank's overall asset holdings, as well as raising interest rates sooner than expected to fight inflation, with an 80% chance of a 0.25 percentage point increase plausible in March instead of May, which is the previous time they had discussed talking about raising the rates. Some investors view gold as a hedge against higher inflation, but the metal is highly sensitive to rising U.S. interest rates, which increase the opportunity cost of holding non-yielding bullion. Investors now await the U.S. non-farm payrolls report due on Friday. We'll see how what that report says and what kind of effect it's going to have on the dollar and gold and silver. The ADP National Employment Report showed U.S. private payrolls increased more than expected in December, pointing to underlying labor market strength. But fast rising COVID-19 infections could slow momentum in the months ahead. Despite the rise in the number of new COVID-19 cases, a scenario that normally would support the precious metal due to its safe haven appeal, gold is facing the headwinds generated by a strong dollar. Ricardo Evangelista, senior analyst at Active Trade, said in a note. And that is just it here. When we talk about COVID on this channel, I try to go beyond the debate about, the legitimacy of it or what have you. And of course, stuff that could get me in trouble on this channel, even for just talking about it. But really, it doesn't matter because it's about how the market reacts to it. And that's what this article is talking about here. You can have whatever opinion you want on it, but we talk about it, how the real effects on the markets. And that is what is the most important thing, no matter what. So I got some people coming on the channel saying, oh, how can you repeat this narrative or what have you? I'm unsubscribing, or I'm not going to be listening to you, if you're going to believe that advice. It's a matter of what the market reacts to it. It doesn't matter what you and I believe. It doesn't even matter what the truth is. That's just it, folks. That's the thing that I want to, that's very important to understand here. Psychology and emotion sometimes do not rely on truth, no matter what that truth is. Your truth, my truth, whatever truth it is. It's the interpretation of it in the markets. And in fact, you can have a very small grain of truth that one doesn't think would be very important to the markets, but it causes chaos in the markets or what have you. It's the perception of truth. And it's also the perception of opinion on truth or the lack thereof. Case in point, with how today, the recording of this video is January the 6th, and what some people call an insurrection, other people call it a riot. It's whatever truth that's out there. How do the markets react to that? Obviously not too much, considering what happened with gold and silver today. But moving ahead here, in other metals, we saw silver drop earlier to 3.1%, almost broke the $22 barrier, almost into the high 21s. It's lowest since December 16th and poised for its largest one-day percentage decline in more than 3 months. Platinum fell as well, and they're showing that palladium dipped, but it's recovered that to flatline now. So there's where that is. Now, here's an article, an opinion piece here from Todd Bubba Horowitz, and saying that the Fed is sticking it to gold once again. And there's some things to think about here, how the market reacts to just what the meeting notes were, not the actual implementation or action. Hence the baking in of where things are, which is why when the actual rates do go up, it may not have that much of an effect. In fact, the metals could actually go up when that occurs. So Monday was the first trading day of the year. Gold, silver, and platinum got hammered. The selling started early and never relented. The pressure on gold was enough to reverse our trading position back to the short side. The price action brings that $14.50 gold into play. In other words, they could eye that. We could see. That doesn't mean tomorrow. It means possibly this year. Much will depend on the world economy, which is still controlling the interest rate markets, where most of the world's nominal rates are negative. Silver got hammered as well, but not to the extent of gold. Someone asked about the crushing of silver. 60 to 80 cents is not even a bruise, but it is for a one-day movement. That is a crushing, and for one day to lose that much in one day is pretty bad, but not for the overall scheme of things. And you get a multiple days of it, and it's a beating for sure. But it's a smashing today to see it drop that much. The sell-off in silver wasn't the biggest down day in the last 3 months. Those who understand the market may look at the sell-off as a buying opportunity. But again, whenever you buy, you have to think about premiums. Where are the premiums at? If silver drops 60 to 80 cents, but the premiums only drop, 40 cents or 50 cents, you're not really saving as much as you should, in my opinion. But nonetheless, whether you are trading or investing, one day never makes a market, and that is very true. Sell-offs of any size are just another part of the trading world. However, we have seen several days in the past couple of weeks as we span latter parts of 2021 and here in 2022, we've had multiple days of bear markets for silver and gold. And so that is something to pay attention to. In all markets, price action determines what will happen in the next day, week, or months. Keep the two strategies separate. The worst trade anyone can make is turning a trade into an investment hoping for a way out. Traders must learn to take their losses and move on the next trade. And that's true. Patience, discipline, and money management always wins the day. And that's true. You're exactly right. And here we see a graph that shows where the trading has been here for gold spot price. It is interesting. And the thing is that as we move forward here, with the markets reacting to what the Fed says in its meeting in its meeting minutes, what does that tell us about where things are going to go if they do raise rates in March? What if they postpone them in the next meeting when they talk about it? I don't know. We'll see. It'll be very interesting to find out where this plays. I heard one report said that they may raise rates at a higher rate. I don't know what the increment is, but if it's a quarter point is the lowest, then that would have to mean a half point, I would guess. Or maybe they can do it a third of a percentage point. I don't know. I don't know what their increments are. But nonetheless, they can't do much. Some people don't think they're going to do it at all. Some people think that perhaps, and they make a very cogent case for actually gold and silver rising upon interest rate hikes, because there's a potential that it may not have the desired effect, especially with what we're looking at with the massive debt and spending that is happening in the marketplace, and with the government spending and all of this money that has been printed, circulated, and circulated even more. Inflation is very real, and it will continue to grow. So those are the concerns that people have. And raising the interest rates up a quarter percentage point or a half a percentage point, I don't think is going to be the magic solution that they think it will be. The psychology of the markets is they don't care. They see it as a good thing because it's going to be a tool that the Federal Reserve has in its toolbox to help stave off inflation. They're trusting the Fed that it will do it. So the Fed is to blame for these low prices today. But again, it's not necessarily based off of truth. It's based off emotion. It's based off psychology. That's how the markets move. We as stackers, when we hold our gold and silver, and we hold it through bear markets, we are operating under the truth of what gold and silver has been for thousands of years. And I think that is profound, folks, which is why you should not sell your gold and silver in a bear market unless you absolutely have to. How do you avoid selling gold and silver if you run into financial hardship? Have an amount of cash on hand or in the bank, preferably both, so that you can protect yourself so you don't have to sell your gold and silver, especially in a bear market for them. So there you go. There's your market report for today. Let me know in the comment section below what your thoughts are. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.